Good afternoon, everyone. My name is Paul Vendrinsky with Go Alberta Connect, and we're here today to introduce you to equity crowdfunding. If you're a small Alberta business, you may not have heard about this new avenue. It's an alternative to raising capital, and it's kind of a best kept secret. So we're very excited to introduce this to the business community. Maybe to start off with a quick analogy, if most of you are familiar with the TV show Dragon's Den or Shark Tank, well, we've created an online version of that concept, which provides Alberta businesses and business owners, as I mentioned, an alternative apart from debt financing to raise funds. But instead of pitching to the Dragons or the Sharks or pitching to Kevin O'Leary, asking all the tough questions about valuation, revenues, that kind of thing, you're pitching to your people. This new exemption now allows you to talk to your friends, your family, your community, your network, and even best yet, your customers. In other words, you're pitching to your crowd, and that's the crowd in crowdfunding. So by definition, what is crowdfunding? It's a fundraising approach where a whole bunch of people contribute a whole bunch of small amounts of investment capital or donations to fund some sort of project. Equity crowdfunding is a little bit different. This is where, similar back to the Dragon's Den or the Shark Tank, you are, as a business, selling equity or stock ownership in the company for exchange for those funds. So, example, company needs $100,000, willing to sell 10% of the company, and to do so, both sides are generally happy. The investor getting into the company, you getting the funds you need. So what's changed? Why is this new? Why are we so excited about this? Well, historically, for a private company to go raise money, it could be restrictive as far as regulations, could be time consuming, could be expensive too. Probably the biggest benefit and the biggest change is who you can now go talk to about this. Historically, accredited investors. Who's that? Rich people. People deemed sophisticated enough to take that risk to buy into a illiquid and sometimes risky private investment. With this new exemption, now companies can raise up to $1.5 million in any 12-month revolving period. And here's the cool thing. You're able to pitch to people that you couldn't talk to before. I mentioned customers. Who better than people who love your product to consider or to have them consider buying into your company? Now, here's the kicker. I think the justification for this amendment was that investors are now limited. They can contribute, but to a maximum of $2,500. So with our portal, depending on the investment, generally you're looking at investors being able to start as low as $100, and as I mentioned, to a maximum of $2,500. What is this fund? What are the funds needed for? Well, you tell me. You're a business owner. What do you need additional money for? Is it to ramp up inventory? Is it to hire new people, maybe pay down debt? There's a number of reasons. As a business owner, you know those answers. We're here to help you get that money. And how do we do that? We, as a portal, we are required as an intermediary between the investors and your business. And we're here to manage the process. We have to conduct a little bit of due diligence, some background checks to make sure you're a legitimate Canadian-based company with operations. And then we get to the fun stuff. That's the marketing, right? And depending on your situation, we can tailor the capital requirements, to tailor the structure, the types of equity. And where this becomes interesting for a lot of companies, if you're a small, especially a smaller company out in rural areas, you're maybe not getting the attention you deserve, whether it's from the brokers or even some of the EMDs. So geographic isolation hinders a lot of times what you're trying to do as far as the fundraising. And with the marketing, as you'll see here, the plan is to really tell your story to a very wide audience. You also increase your base of potential customers, your investor base. So there's a lot of community support and community loyalty building with a project like this. So maybe let's start with a quick example. Eric's IPA Brewery. Now, this fictitious example, this is not a customer of ours at this point. We have been talking to a lot of breweries and distillers, so it was suiting to start with one here. They require $250,000. They need to inventory up. They got a big contract through co-op liquor stores, and they need to hire a summer student for some of this. They're offering 20% equity. If you follow the math, we can do that later. They're given a post valuation of $1.25 million. That's the value of the company with this financing. The structure is Class A voting shares. Investors can invest as little as 100, maximum 2,500, and we have a 90-day window to close this. And again, what do? We're bringing you the market. We're helping you market this on our website. Have a look, www.go-alberta.ca. We create a page for your company's investment. And on that, we're going to include everything a potential investor needs to know. Who you are, how you got here, a little history on the company, maybe an intro video. You probably already have something like that already on your social medias. But to give a little history on the company through a PowerPoint presentation, some of the highlights, who, what, where, what's this money going to be used for, what the investor can expect going forward. There are some official documents that need to be included, which we will help create that. And then the marketing side, social media, whether it's Twitter, Facebook, Instagram, your own, as well as ours, as well as groups we're a part of. This information is going to flow to all of them. Email presentations, newsletter attachments, and then, of course, webinars. Live Q&As, webinars, and sometimes, depending on where you are, some live forums to do the same thing. We're going to tell your story to the masses. But like I said, this is an opportunity to pitch to your crowd, your friends, your family, and they all have access through the website and disseminations. And what we've done also on our portal is made it very easy for investors to just click and invest. There's a few questions, a few risk disclosure areas for them to click, and then they email transfer the money. It's very simple. It's not like opening up a brokerage account where you have half an hour of pages and half an hour, maybe an hour of multiple pages. So we've made it really simple for the investor to participate. Then comes the closing. Money is accumulated in a trust account. Again, we're the intermediary. We have a trust account that's separate from us through Royal Bank that the funds will accumulate. When the minimum is reached, the target is hit, and the funds transfer to the business and the shares transfer to the investor. A little bit of regulatory filing is done on CDAR and through the securities commissions that will help you with. And in the unfortunate case where the target isn't achieved, all money that was accumulated, all of it goes back in full to the investors. And then we just begin planning on what we can do next time, what went wrong, and what we'll do going forward. So before we wrap this up, this was just an introduction on crowdfunding, but some considerations. There's going to be discussions with your board, potentially, your lawyers, your accountants, and even us. Debt versus equity. There's a difference. Borrowing money and giving people equity investment in your company. There's a difference, and there's reasons why you would want to do one versus the other. Debt has become more expensive. Caveats, some situations, a little more restrictive. With the equity financing, there's a cost of capital. This costs something. And depending if you're raising $50,000 or $1.5 million, we charge a percentage of the money raised, but there are some front-end costs that are going to be the same, whether you're raising a little or a lot. Why are you doing this? Sometimes it's succession planning, piecing out the company, maybe prior to an eventual sale of your company or retirement. A lot of times it's a bridge to later financing, and it's a precursor for some companies for an IPO listing on a stock exchange. Considerations also that you have new partners in the game and you have reporting and some ongoing communications to take place. But that's good. You have new cheerleaders, you have a new fan base who wants to see you do well. That's why they're helping you. So again, my name is Paul Vendrinsky. I'm with Go Alberta Connect. Check out our website, check out some of our posts. We're going to be putting on a lot of these presentations that can get a lot more in detail. And if you have any questions, please reach out. But for now, let me know if you have any questions. Thank you very much.